Hello, everyone. Welcome to Bald Guy Money. I am Bald Guy, and 2 years ago, I came on here and told you all to save in gold and silver, especially if you wanted to buy a house in a market that was becoming increasingly unaffordable. Because what I said was whether you wanted a property as an investment to generate income and rebuild your stack with, or you just wanted to get into your first home, keeping that money saved in metals would make it much easier to accomplish those goals. Now, since I made that video based on fourth quarter 2022 housing prices, so numbers from the last 3 months of 2022, the median US home price has dropped by 5% from nearly $450,000 down to $420,000, with a more than 10% correction in inflation adjusted terms, as you can see in the image here. And when we take a peek in at some other key markets that I track, like Canada and Germany, you can see here that those declines have been even more exaggerated than in the United States versus the 2022 highs. And while this has been happening, in US dollar terms, the prices of gold and silver have gone up 66% and 58% respectively since the October 2022 lows, indicating that something has happened here and that it's time to give you all an update on where we stand with this situation. So in this video, we are going to take a deep look at real estate price trends during the last 8 recessions, going back to 1970 to first of all determine whether real estate is close to the bottom now or if we're still in for a big correction from here. Once we're done that, we're going to take a peek at what these trends mean for people who have been waiting for a market correction to purchase real estate with the help of gold and silver. We'll look at how much gold and silver I think you'll need to buy a house in 2025 and 2026, and how those numbers compared to what I said here on the channel 2 years ago. And we'll finish this video by answering a viewer question that covers what 3 asset classes I think will go up in price the most as a consequence of asset tokenization, which is a topic I recently discussed in the context of the Great Taking. Now, just before we dive in, if you're looking to get silver or gold at a great price from a dealer you can trust, check out www.summitmetals.com. They currently have these Australian kookaburra coins for cheaper than most sites are selling generic rounds. And while you're there, if you're a first-time customer, remember to get your 5 ounces of silver at spot by using the code NEWCUSTOMER while the deal lasts. That's www.summitmetals.com. Okay, so jumping right into it, I know that many of you are waiting for a dramatic correction in housing prices because it is, of course, what we saw in the last real market crash, which was back in 2008. And because of that recency bias, it has a lot of people convinced that is what happens every time. But if we look at data going back to 1970 and compare it to where we are today, and assuming we are already in the thralls of a recession, as you can see here, the recent pullback in US housing prices is very much in line with what we've seen during past recessions. Now, why I think a lot of people are expecting something dramatic to happen in real estate, and I said this recently to my Patreon members, is because they attribute the 53% pullback we saw on the stock market after the 2008 crash to the housing market, when in reality, median home prices in the USA pulled back about 19% from the pre-crash top to the 2009 lows of the crash, and in some cases they hardly crashed at all, while in other places like Florida that were heavy in speculation, they saw obviously worse corrections than they average. So, what I am trying to tell you by showing you this data from the past 7 recessions, plus the one I think we are in right now, is that if we are not at the bottom for housing now, we are not far from it, and that just like when housing prices increased in the 1973 to 1975 recession, what we saw in the 2008 housing crash was a unique situation, in this case driven by rising interest rates in a market where many bad adjustable rate loans were made. And if that was to be the situation this time around, we would have already seen a bigger correction by now, considering the fact that we have been at elevated mortgage and interest rate levels since November 2022. Now, for those of you who think I'm crazy, I have prepared the following data for you because I assume most of us agree that gold and silver are real money. And what real money shows us is that the crash, especially when you factor in inflation, has been a silent crash. No fireworks, no alarm bells, no movies starring Christian Bale as a quirky hedge fund manager named Michael Burry. No, what we've gotten is the price of a home in the United States when measured in gold and silver down 40% and 33% respectively. And remember, it's not the value of gold and silver that have gone up during this period, but the value of the US dollar that has dramatically gone down, just as in the case of Canada, where home prices versus the 2022 highs are now down 46 and 39% when measured in gold and silver, as well as in Germany, where they've had a full-on crash with prices cratering by 55% and 47% when measured in gold and silver versus those 2022 highs. Now, the reason I'm sounding the alarm bell in 2025 on this is because when I look at the leading indicators, that being countries which fell into recession sooner than the United States and how they've reacted by cutting rates quicker and growing the money supply faster, and you can see the development of money supply for Canada and Germany here on the screen right now, what I am seeing in those markets is a stabilization of housing prices and even a reversal in the case of Germany as more money is pumped into the system, because that's ultimately the point of all of this. With Social Security and other national pension programs going broke, the only options left to support an aging population is to invite new workers to the countries to be taxed and print more money to inflate asset values to prevent a total collapse of a rotten system. Now, turning to the US housing market, considering the fact that the M2 money supply is on pace to make a new high in 2025, compounded with the fact that Donald Trump made his fortune in real estate and that he will use real estate prices along with the stock market as a gauge of his economic success, I think we could be in that stabilization phase in the USA right now before we see a bounce in prices. Now, just before we review my gold and silver to real estate targets from 2 years ago and check in on how much gold and silver you'll need to buy a house in 2025 and 2026, I want to encourage everyone that is in the market to buy some land, either for investment purposes, development purposes, or just to camp and hunt on, to check out the sponsor of this video, Land of Land. They are now a strategic partner of the Bald Guy Money channel because what they offer aligns to my strategy of hard asset investing as protection against inflation and currency debasement, and also because so many Bald Guy viewers are already satisfied customers of theirs. Now, if owning a piece of land in the United States for as low as $1,000 sounds interesting to you, check out their website or give them a call at the number on the screen, because buying land with them is as easy as buying a gold or silver coin from an online bullion dealer with no need to leave your home or worry about verifying if the person selling the land to you actually owns it because they sell it directly to you. Their website is easy to use and they give you all the details you need to perform your research before buying, which includes property coordinates, zoning details, and taxes. And the best part is, if you find a deal that matches what you want, all you have to do is contact them, agree on the price, and you can pay with a bank wire or even a credit card, and they will have your deed back with you in roughly 1 to 4 weeks, depending on the county. And if you're really trying to shop for a deal, they auction off 50 lots every week, and here are a few examples from this week's auction. And by using promo code BALDGUY, they will give you $300 off your invoice for any property bought at auction. So if you want to buy land that you can stand on, hunt on, lease out, sell to a developer, whatever it is you want to do with it, if you want that as an additional way to protect your savings from inflation and build your hard asset portfolio, please check out landofland.com or call them at the number on the screen. Now, coming back to what I said about buying a home with gold and silver 2 years ago, I said the best way to make an entry into the real estate market, either with a starter home or your first rental property, was to target something that cost 35% of what a median home costs, because that was the strategy that I used when I started. So remember, I wasn't talking about buying a castle or Jeff Bezos' home for 10 ounces of silver. That's not this channel. I'm not that guy. What I said then was, this is a realistic target to set that will help you accomplish your goal and relieve a lot of pressure while doing it. And if you remember, I researched home prices in multiple cities in multiple countries to back up what I was saying, and here is a list of the very regular places that were included in that research. So no, I wasn't looking in downtown Manhattan or property next to the Eiffel Tower in Paris. And the conclusion I came to in that video was that somebody who is stacking both gold and silver would need approximately 25 ounces of gold and 1,000 ounces of silver to purchase that starter home or starter rental property. And at the time, that amount of precious metals was worth, in US dollar terms, $68,500, and meant that you were only about 44% of the way to reaching the goal of buying the type of house I described. Now, fast forward to today, with that same amount of gold and silver being worth $97,895, so 43% more than when I said to get it, it means you are now 67% of the way to the target, which is 23 percentage points closer than 2 years ago. And although we may not quite get to the finish line with the 25 ounces of gold and 1,000 ounces of silver in 2025, when we factor in my 2026 price targets for gold and silver, I expect to see the US dollar value of those metals rise to approximately $152,500, giving you about enough to buy that starter home or rental property, even though I expect housing and real estate prices to bounce back in US dollar terms either this year or early next year, which is why I also think deploying fiat savings into real estate or land is a great diversification move at the moment. Now, if you don't have that much gold and silver, but want to get a home still, that's okay, because all of these increases in percentage terms have benefited you too, and gotten you closer to being able to put a down payment on a home, which is how I bought my first property. So it's nothing to be worried about, nothing to be ashamed of. In fact, that's how most people buy their first property. And with interest rates poised to come down in 2025 and 2026, opportunities to refinance a mortgage will be available in the future, so keep that in mind while watching this video. Anyhow, with that covered, it is now time to move on to this video's viewer question, and please remember that I answer one question selected from the comments section of every video I do, so please, if you have any questions on anything I've covered in this video, drop it in the comments section, and you never know, it may appear in my next video. And this week's question comes from Ben, and although I said I wasn't going to touch on this topic for a while in last week's video, Ben's question was too good to pass up, because he wants to know how regular people can profit or benefit from elements of the Great Taking program like tokenization, and I think it's an important topic to cover, because while most channels are happy to complain endlessly about it while not being able to stop it, or even make you feel fear that it's coming to get you, the mission of this channel is neither complaining nor fear. It is financial preparation. And in the spirit of financial preparation, I feel it's only fair to tell you exactly what I think are the best investments leading into a tokenized economy. Now, just briefly, if you haven't seen my last few videos, I have been talking about this book called The Great Taking by David Rogers Webb, where the author talks about an elaborate scheme to rob people of their property, and what I have been trying to say is that the book is a work of fantasy, and that governments and banks are taking from you right now via taxes, fees, and the rigging of financial markets, making it either necessary in the case of government or downright easy in the case of banks for those entities to get their hands on the wealth of regular citizens. And what I've said the next step to that could be is tokenization, which is a process in which all property is converted into digital shares that can be used as currency in regular crypto-like or CBDC transactions, creating more opportunities for taxation and financial market gambling. Now, unlike many of the people leaving comments under these videos, I don't think this means we're doomed, and although I think many of you want me to say we're doomed, like I said in my last video, it simply means that those who do not understand this system and cannot resist the urge to either overspend or gamble in the financial markets, those people will be the main losers here, while people who take the time to understand what is coming and position themselves in advance will be the winners. So, think of it like debt. In general, we can agree that debt is bad, but the wealthy who borrowed a lot of money to buy assets before 2020 used debt to accumulate things that went up in value due to inflation, while the dollars they paid back were worth significantly less than when they were borrowed, also due to inflation. And that is how you use bad aspects of the system to your advantage, and that's what Robert Kiyosaki, author of Rich Dad Poor Dad, has been saying for years. So now we have this new system, and like debt, we can use it to our advantage by positioning ourselves correctly before it is implemented to take advantage of it. Because as much as I may not like it, the Bald Guy Money channel doesn't have much influence over the globalists that are implementing it. Now, as a general rule of thumb, owning things that are scarce and can't be printed is a good approach. It's been a good approach for the last 1,000 years, and it will be a good approach for the next 1,000 years. And within those assets, I would choose ones that have an increasingly high barrier to entry. What do I mean by that? I mean assets that are becoming less affordable for the average person. Because when tokenization of those assets makes shares in those things attainable, you will see money flow into those asset classes at breakneck speed. And it's all the better if these assets cash flow or return a profit or a dividend, because in a tokenized world, people are going to try to generate cash flow via sources that were previously not available to them. And that includes things that I've added to this list, like intellectual property. For example, do you have a patent? Those will probably be tokenized too, so the inventor can get money for the idea up front, while purchasers of the idea collect royalties in the future. Now, to get into the specifics of the 3 assets that I think are going to benefit most from this, the first one is gold. And why I cover gold, even though Ben asked for others, is because I want you all to understand how this is going to happen. Because whether you decide to tokenize your gold or not, there will be people and companies that tokenize gold. And the more widely available and accepted tokenized gold becomes, especially in a world of higher and higher inflation and currency debasement, the more demand for gold will increase and price will follow demand, much in the way gold price grew when ETFs made it easy for wealth funds, hedge funds, and retirement funds to hold gold when they were introduced in 2003. And with the affordability of gold becoming a major barrier to entry for regular people, I mean, just look at the fact that the average annual household savings measured in gold is 1/10 today of what it was in 1989. It's honestly shameful and a consequence of bad governance. Anyhow, people who without tokenized gold might not be able to afford it or own it or transact in it will be able to get some due to the fractionality tokenized gold offers, not only eliminating the barrier to entry for many people, but also making super fractional pieces of gold like the 1/1000th of an ounce gold back and its 98% premium above spot completely obsolete. The next asset class that will benefit from tokenization is real estate. And you may be saying tokenization will make it easy to confiscate. And what I'm saying is just park the fantasies of David Rogers Webb on the side for a moment, because governments are looking for transactions to tax, and banks are hoping you will gamble your tokens away on rigged market trades. That is how this is being set up. But they know where the border is. And as they print more and more money, many people who feel priced out of the real estate market today will look at tokenized real estate as a way to get some minor ownership in a market that otherwise would be inaccessible to them. And this especially applies to people who are aspiring landlords, because if buying an entire property to collect rent on seems like a daunting task now, buying digital shares of a property with a percentage of the rent transferred to you each month based on how much you own makes that dream as easy as buying a crypto. It's easy, it's instant, and it will attract trillions of dollars, as these projections from ScienceSoft suggest, ultimately driving prices of both developed real estate and undeveloped land up, especially if they are purchased in good locations. Now, the final asset class that I think will benefit greatly from tokenization, and it may be a bit of an unexpected one, but it's collectibles. And why I say collectibles will benefit from this is because they're scarce. There have been more and more price barriers to entry as prices have gone up for collectibles, and we've seen that in the case of fine art, it's easy to tokenize and people accept it. People really like this, and it's already driving prices up in a market that, in my opinion, when we're talking about fine art, has already gone off the rails when it comes to prices, as you can see with the ever-rising record for world's most expensive painting. Just when you think the previous number couldn't be beaten, it only takes a few years for somebody to come in and crush it, and if you give that power to tens or even hundreds of thousands of people who can buy shares or tokens in these paintings, the power of speculation will take over and drive prices up even higher. And in a market where many things are considered to have collector value, you will see communities created around these tokenized collectibles, much like you sadly see with meme coins and crypto these days, but at least there will be something tangible backing it. Now, once again, let me be clear. This does not mean I accept or endorse tokenization. I do not, and I encourage everyone to resist tokenizing your assets if you can. But the impact that tokenization has on the value of those assets will be material, whether they are tokenized or not, because these three assets I have named will attract more money, and in the case of non-tokenized assets within these categories, they may even fetch a higher premium on the market, so keep that in mind too. So that's it for this video. I want to thank you all for watching. Please remember, if you enjoyed this content, leave a like below, and if you have a question for me that you might like to see me cover in a future video, remember to drop it in the comments section now. As I say at the end of all of my videos, please remember to take care of yourselves and take care of each other. I'll see you all in the next video. Goodbye.